Bitcoin was supposed to be ignored by the rich. That was the idea. A decentralized system, outside traditional finance, outside institutional control. But now something strange is happening. The same institutions that once laughed at Bitcoin are buying it aggressively, quietly. Banks, funds, billionaires. Even governments are starting to pay attention. And the public still thinks this is just another speculative asset. It isn't, because when institutions move into a market, they usually know something before everyone else does. And right now, they are accumulating Bitcoin faster than most people realize. The real question is, what do they see coming? Smart money thinks differently. Retail traders focus on price. Institutions focus on positioning. That's the difference. Retail asks, can Bitcoin go higher this month? Institutions ask, what happens if Bitcoin becomes a global reserve asset over the next decade? That's a completely different level of thinking. And once you understand that, their behavior starts making sense. Institutions don't chase hype. Big money rarely enters during peak excitement. It enters quietly, before the headlines, before the public attention, before retail fully understands what's happening. That's exactly why institutional accumulation often looks invisible at first. No excitement, no dramatic announcement, just slow, consistent buying. And by the time the public notices, most of the positioning is already complete. Bitcoin solves a problem traditional finance can't ignore. The global financial system has a problem. Debt keeps growing. Currencies keep losing purchasing power. And trust in traditional systems keeps weakening. Institutions see that. They understand inflation. They understand monetary debasement. They understand systemic risk. And Bitcoin offers something rare, a fixed supply asset that cannot be manipulated by central banks. That changes the conversation entirely. ETFs changed everything. For years, institutions stayed away from Bitcoin for one reason: access. But Bitcoin ETFs changed that overnight. Now, large financial firms can gain exposure to Bitcoin through traditional markets. No wallets, no exchanges, no complicated crypto infrastructure. And these ETFs buy real Bitcoin, which means every large inflow removes more supply from the market. Quietly, daily. Institutions think in decades. This is another thing most retail investors misunderstand. Institutions don't think like traders. They think like long-term strategists. They don't care about small daily volatility. They care about long-term asymmetric opportunities. And from their perspective, Bitcoin may represent one of the most asymmetric financial assets of this generation. Limited supply, growing adoption, global accessibility. That combination is extremely rare. The public still isn't fully paying attention. Even now, many people still treat Bitcoin like a temporary trend. But institutions no longer behave that way. They're building exposure, allocating capital, creating products around Bitcoin. That's not the behavior of entities expecting Bitcoin to disappear. It's the behavior of entities preparing for Bitcoin to become more important over time. And that shift is happening quietly beneath the surface. Why scarcity matters. To institutions understand scarcity better than most people. They know that Bitcoin has a fixed supply, 21 million forever. And as more capital enters the market, competition for that supply increases. That's why aggressive accumulation matters. Because institutions aren't just buying Bitcoin, they're securing exposure before scarcity becomes obvious to everyone else. The market may be underestimating what's happening. Most people still think this cycle is about hype. But what if it's actually about transition? A transition from retail-driven speculation to institutional-level accumulation. Because if institutions continue buying Bitcoin aggressively, the structure of the market itself may start changing permanently. And if that happens, most people may realize too late that the biggest players were already positioning years earlier. Why institutions rarely move backward. Once institutions enter an asset class seriously, they rarely leave completely. That's how capital works. First comes small exposure, then strategic allocation, then infrastructure. And Bitcoin is already entering that phase. Custody solutions are improving. Financial products are expanding. Regulatory clarity is slowly developing. Step by step, Bitcoin is becoming easier for large capital to hold long term. And that changes everything. Retail still thinks it has unlimited time. Most people still believe Bitcoin will always be available at these prices. That assumption may be dangerous because institutions don't wait for certainty. They position before certainty arrives. That's why smart money accumulation often looks boring at first. No excitement, no headlines, just gradual ownership transfer from weak hand to long-term holders. And by the time the public fully understands what's happening, the market usually looks very different. This cycle feels different for a reason. Previous Bitcoin cycles were driven mostly by hype, retail excitement, speculation, momentum trading. But this cycle feels different because institutional capital changes market behavior. Institutions buy slower, but they buy larger. And unlike retail traders, they often think in years, not weeks. That creates a completely different foundation underneath the market, one that most people still underestimate. The real question institutions are no longer asking, is Bitcoin real? That debate is fading. Now the real question is, what happens if Bitcoin keeps growing for another 10 years? Because if Bitcoin continues expanding globally, continues attracting capital, continues proving resilience, then the institutions accumulating today may not look early in hindsight. They may look prepared. The shift has already started. The biggest financial transitions never feel obvious in the beginning. They happen slowly, quietly, while most people stay focused on short-term noise. And that may be exactly what's happening with Bitcoin right now. Institutions are accumulating. Supply is tightening. Adoption is expanding, piece by piece, until one day, the market suddenly realizes Bitcoin is no longer being treated like an experiment, but as a serious financial asset. Most people still think institutions are testing Bitcoin. But what if that phase is already over? What if the real accumulation has already begun? Because large money doesn't move after certainty. It moves before it. And right now, while retail keeps waiting for confirmation, institutions may already be positioning for a future most people still can't see clearly yet.